Welcome to another update from Marketplace Securities on the resources market here in Australia. Without a doubt, we could say that we've got a lot of volatility in these markets, and looking back at the broad indices, it's clear that the Australian market's the same level it was 2 years ago, with a lot of internal volatility as the market moves up to around that 5,000 level on the all ords. Each time it gets up there, there seems to be some international event which sort of undermines everything. But as we look back over the past decade, there's been a lot of volatility, a lot of international issues, a lot of natural disasters, and it's been extremely difficult to make money and to see any trend. It's been very, very difficult indeed. But as we go through all this, we do see that the markets are still maintaining a certain pessimism, which I think is sort of healthy in one sense, because it does not appear to be reflecting the true fundamentals that we see. What I'd like to confirm to people is that there are three things that we've really defined and recognised in the marketplace. The first thing is the demand side issue that we have through what we call the non-OECD countries, China, the BRIC, Brazil, India, whatever you want to call it. It means that those non-OECD emerging countries and economies have been very robust, and they've had this very strong demand for raw materials, and consequently we see that most clearly in the steel industry. The steel numbers in China for April showed a record level of just over 715 million tonnes annualised production. It's a very good sign of the underlying demand within the economy. People are concerned about Chinese growth, but they've been concerned about Chinese growth probably for the last 5 or 6 years. But I think it will remain quite robust as we see the economy broadening and increasing in its level of complexity and sophistication, which I think will only strengthen the economy. The second thing we always look at is supply side. As far as the resource sector is concerned, we've got real tightness in the iron ore market, tightness in the coal market, tightness in the oil market, the copper market, and gold and silver. And then we can look at the smaller metals and look at the rare earths. That we've really got supply side issues that are going to keep commodities on the boil, I think, for quite some years to come. And the third thing is that the debasement of Western currencies, as we're seeing particularly in the United States, and also parts of Europe, but it's really interesting to see the strength of the A dollar against all those currencies. The volatility again reflects the various things from European debts, US debt and natural disasters, but overall I think this thing is going to be resolved in to the upside. One of the really important things we see is BHP with its views. Everyone should look at the presentations that BHP puts out, because they are really at the leading edge and at the coalface, if I can use that term, of what is happening in the real markets. And they're the ones that are saying that the iron ore market is undersupplied. They're the ones that are saying the copper market's tight. And then we also like to focus on what all those increased commodity volumes mean at high prices. It means much higher revenues in the A dollar. As we've pointed out in presentations, and you'll see on the slide here, in the first 5 years of the 2000 decade, we saw Australian exports from the resource sector being around 50 billion. They got up to 160 billion in 2009, and they're down a bit in 2010. I should be up this year, but by the time we get out to 2015, we're looking at about $250 billion, another $100 billion of export revenues, and even that's based on iron ore prices that aren't as high as we've got at the moment, and also 120 or $1.20 on the currency against the US dollar. So that will have a big impact on what goes on in Australia. So when we look at those fundamentals, the markets, the commodities, commodity prices, I think gold and silver, oil and copper have probably bottomed just in the last week, and I think we're going to see much higher prices on those going forward, and then I think we'll see some catalyst to send our market higher into 2012. Finally, I want to talk about the cash levels. There's been very large increases in the amount of cash that's gone into the banking systems, the CMT systems, and superannuation funds, as far as we can work out, have probably got around 25 to 28% cash overall Now that's a lot of cash on the sidelines. Our superannuation funds are about $1.35 trillion, and that's bigger than GDP. And so it really means that 25% of GDP is cash. That cash will be redeployed, and I think it's going to be pretty interesting 12 months ahead of us. Finally, go back to our MPS wave view of the markets. Clearly we've been climbing that wall of worry. We've had a sideways movement now for nearly 2 years. I think we're getting towards the end of that, and we should have a move upwards as we get some resolution on these commodities after the recent pullback. Thank you for your time.